The point of this podcast episode is you can go to a one bank one day and their rates are awesome. The next day, their credit box gets tighter and they raise rates up because they're not in a position to make more loans for whatever reason, or some press came out in the news and they're constricting their buy box or their credit box. So lots of variables. There's a lot of uses for SBA financing. You can use SBA financing for anything. There are options for fixed rate. I understand the concern with everybody out there because we don't know where rates are going. I do think, however, 12 to 24 months from now, they will start reducing rates, but we don't know what's going to happen in the meantime, and nobody's got a crystal ball. Hello and welcome back to another episode of the Investor Financing Podcast, and I'm your host, Beau Eckstein. Today we're going to talk all about SBA 7A loans. There's options, people. You can get fixed rate on SBA financing. Banks prefer variable rates, but they do sometimes offer these fixed rate SBA 7A options. I work with banks that can do fixed rate options, so book a call below if you want to discuss your deal in particular. But oftentimes, these banks at certain times offer promotions, even though there's the general SOP and guidelines for the SBA program. Each bank or each senior credit officer has certain things he or she likes. They might have had a bad experience with a car dealership and now they won't fund any car dealerships. So what I do is I help you facilitate and package a deal and bring it to the right bank or non-bank SBA lending partner, because that's the way to navigate. Everybody's got a different credit box. At the end of the day, even though the general guidelines are the same, you could take it to one bank and they decline it in 2 seconds. Next bank loves it and gets you an approval in 24 or 48 hours. There's also the options of variable rate versus fixed rate. And some of our partners during some times have, like, they want to close the year out, right? I have a bank right now. If a loan submitted and closed before the end of the year, they're offering on a 25-year AM SBA 7A. Now, this would have to be for something with real estate involved with it, but they'll do a 10-year fixed period. So it'd be fixed for 10 years at a pretty good rate. So the point of this podcast episode is you can go to a one bank one day and their rates are awesome. The next day, their credit box gets tighter and they raise rates up because they're not in a position to make more loans for whatever reason, or some press came out in the news and they're constricting their buy box or their credit box. So it just really depends. And there's certain banks as well that their majority or their bread and butter is SBA. There's a lot of regional and community banks that they're not a huge billion-dollar bank, but they do, like, they're in the top 20 for SBA production. Because at the end of the day, a certain percentage of that loan is getting guaranteed by the SBA. And then if the bank is a PLP, that means they're delegated to underwrite the deal in-house. They don't even have to bring it to SBA for underwriting approval. And then there's some lenders that they send in, no matter what, they're not PLPs. They'll actually send the full file for a final sign-off by SBA. So you want to know these things and to make sure that you understand the flow, you understand the expectations of why a variable might be a better option than a fixed rate. So lots of variables. There's a lot of uses for SBA financing. You can use SBA financing for anything owner occupied as long as it's not on the do not lend list. So rent replacement, you can get up to 100% financing on rent replacement deals. So you're leasing and you want to go buy a building for yourself, you can get up to 100% financing. The 7A is going to give you a lot more flexibility. We could potentially break it up into a 504 and 7A, but doing a one loan on SBA 7A where we build in all the financing costs. And I should say some SBA 7A lenders like to break up the real estate with a 7A and the business. So they would do two separate loans. Some of them will just do one loan on this when there's real estate involved. But we could probably find one loan, 25-year term, build in all the operational costs, your working capital, as much as we could, as much as the debt service allows for based on the cash flow of the property. There are options for fixed rate. I understand the concern with everybody out there because we don't know where rates are going. I do think, however, 12 to 24 months from now, they will start reducing rates, but we don't know what's going to happen in the meantime, and nobody's got a crystal ball. So we can explore those options. At the end of the day, if we're going into a 7A, it's got a 3-year prepayment penalty. So the advantage is that we take over the business, we get it running, we create equity by running the business in a more efficient manner, increasing NOI, and then it's going to give us more options to refinance in 3-5 years from now. And then you're good to go. You can go into conventional, you can go into another SBA refinance, but most people end up going into a conventional loan. So there's fixed rate options, end of the story. Not all banks offer them, but they are out there. And let me help you navigate the waters, and we'll find you the best deal. My contact information is below. Would love to talk to you about the SBA process and find out a little bit more details.
EquityInjection.com is the perfect solution for aspiring entrepreneurs who want to acquire a cash-flowing business, but don't have the necessary capital requirements for the equity injection. With our equity investment service, we can provide the necessary funds to help you acquire the business of your dreams, whether it's a small business or a large enterprise. Don't let a lack of funds hold you back from achieving your business goals. Visit EquityInjection.com for more information.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.